Okay, so let's move on to the Aussie Swiss. Okay, so we've had this one right. Okay, we settled in. We settled in here. Look at that at that support. Okay, it really pays to zoom out. So yes, we've been making lower lows and lower highs. We see that we come into support, and now right, we're correcting to the upside on that Aussie bullishness. If you come to the daily, look at that. Okay, it's clean. If you need help visually with your direction, especially from your higher time frames, right? Don't hesitate to put your cloud on to see where we are long term. Okay. So if you put a cloud on here long term, you see how this is pushing up through that zone. Okay. Again, these Aussie pairs are pretty high, right? When you talk about the stochastic and that upward momentum is at 94%. So it's been a nice ride off these support levels. Okay, so you can see where we're coming right to the top of that cloud. We broke this level of resistance, right? And we're pushing up. So good bullish momentum. It's just a matter of whether or not we're gonna eventually break through on this Aussie Swiss. But hey, we've been bullish. So when you come down to this daily chart and you look at everything that's going on off that bullish move, right? So you can see how we've got a new AB boundary. Right now, we're accelerating off this 236. Okay, we're accelerating off this 236 level, and we're moving right up for right now. This is a 4-hour level here resistance. You got another 4-hour level resistance level there. Okay, but we do not on this 4-hour. We do not have a 382 yet. Okay, so this could possibly be moving into next week, become an 80-20 scenario. Okay, we can see our stochastics in the buy zone. All right. So what we want to do is once it pushes up to the zone, we want to get good confirmation. See if it'll form a high in that zone. See if you're not limiting in, right? Hit the sell limit. See if you want those extra confirmations, look for your trend line breaks once it gets to that zone, right? Especially if you like a tighter stop. If you don't like that, like a wide stop, you want a tighter stop, then you definitely want to wait for a price to settle, preferably form a high, right? And then break a trend line, right? So you want to see price break your trend line and then start moving to the downside. Then you can put your stop just above that high if you don't want to stop loss that wide. That's always an option. Okay. Janice asked to switch direction long term. We're moving up right now, right? We're moving up. So we're bullish. Okay, if you come to the 1, right, and you can see how that's stochastic, right? How we're overbought. So it's approaching some levels. So we're making higher highs and higher lows. That's a beautiful reaction out of this zone up against the trend line and up against support. Look at that. So hey, can we get to that 6105 level, the extension? Okay, put us in line, right? Moving on up around this 80-20 zone and then look for the counter. So long term, right now we're moving long, especially, okay, look at this, look how these levels are playing out, okay? So what this could be is a correction and then a continuation. It's just a matter of when we get that correction. That's what we're looking at, trying to figure out. Yes.
Excuse me. So on the daily, if you were looking at it, I guess it depends on how far back you go. To me, it looks like it's overall bearish.
It is
from the daily, but it's just but it's currently going through, when I scale down to my 4-hour, I guess currently going through some, I guess, correction or bullish right now. But I guess that's the issue. Like, what if I had gotten into it at a time? I guess I don't know when one would have gotten into it, but if you're looking at it to figure out the overall trend, so you know which direction to put your trades, if you had gotten into it as a sale, I guess I'm wondering, would you have been stopped out or?
So if you got into this short,
yeah,
right. So let's look at what's going on here. Okay. Let's scroll back. Okay. Because you see from the top, right, that it's been bearish, correct?
Yes, from the top, yeah.
It's been a bearish move. Okay. Like this. Right. So there's your overall. We're just making a play off of finding support. Okay.
Wow, that's long. This is like,
you see that?
you know, yeah, that would have really played out yet for selling, you know, as a sale. That's a long window there.
Yep. You see that?
Wow. Yeah.
So we're just making a play off of the near term price action.
But it's
Right? And
possible that you could still have something out overall long term as a sale.
Correct.
Okay.
See, because look at what's going on, right? This is the buyers and sellers in the market, right? And this is an excellent question, right? This is why you see, look at the market moving in waves, right? And this is why this is just our overall philosophy and what we do, and we make plays off of that, right? We find our sweet spots from that. So look at what it's doing, right? See that? So even though those overall bearish, you have your time because is that battle, right? So my buyers want a low price, my sellers want a high price. See that? So it's only moving three ways. So we just as traders, knowing the sweet spots of things that we like to trade, we can come in and we can make plays in between all of that. Second, get this off. Okay, so now look at where we are. Look at what the price action is doing. See? On your lower time frames, right? That's a sizable move to the upside.
Right. So take advantage of it.
Right. If you want. There's some traders that are only going to trade with the trend, right? So that's why we always give you the multiple options, because as a trader, we can't make that decision for you, right? So we just show you your opportunities within the Fibonacci sequence. So if this is going to continue, once price comes into this zone right here, a bear is not doing anything right now. A bear is waiting for it to come into the zone, and then they're going short it.
Right. Okay.
So it just depends who you want to be. We know there are certain counter trend trade setups, right? Like our 80-20. That 80-20 is a counter trend scenario, right? That we could take advantage of. And oftentimes when you run your fibs, when you come into these levels, these low levels, oftentimes it'll be a 80-20 scenario, right? And so that represents, hey, that's an extreme low. We want to take a shot at getting long on that if you want to. If not, then you just wait, right? So if we're buying 80-20s and you're saying, no, I want to sell, then you need price to move in the same direction anyway, because you need a high price. You get what I'm saying?
Right. Yeah, that makes sense.
You need a high price. You need a high price to get short. So if I take this cloud off, let me take this off, right? You can see like this is what it's doing. It's breaking down and it's retesting. You see how it retested the level, then it broke down and it's coming, it crashes through a level, then it likes to come back and retest the level. That's why we always start everybody out with support and resistance. Like get your support and resistance down. The fibs just help you set long-term targets, right? And where this trade may end up, right? So here's this D extension. Now the thing is, at some point, when you're running fibs, like I can run it off this C, right? So the more near-term fib running off of here would be somewhere up here like this, like that. See how this is doing? So I've got that longer fib running from way back when, but if you run it off that C, right? For a more shorter term on a daily, this is what you're looking at coming down off that C on that larger field. See that?
Yeah. Mm-hmm.
Okay. So now we know that it just doesn't, price just doesn't move like this. Right? And this is the whole concept. Price is just not, even though it's gotten good momentum. Hey, you had a surprise rate hike out of Australia and you got a stock market rally, right? So that's good. That's good for a commodity currency. So you've got this acceleration, but you see how these, because these are daily candles, right? How it's moving up, but it's not moving like this, right? Right? It's not moving like that. Okay. It's gonna move when you get down to these lower time frames. This move to the upside is moving like this. You see what I'm saying? And so this is
Yeah.
this is what you see here.
Mm-hmm. On a lower time
See
frame.
this? Yeah. Right. So it's working up. It's working up to those targets.
It seems
Right.
that it would have to that it's just good to have two accounts. Now that I'm looking at it, if you're gonna take advantage of both places, I can see me getting this all tangled up.
Oh yeah. If you want to take advantage of, but we've suggested that before. You know, if
Yeah.
then you want to have, like, if you want to have like a long-term position trading account, to where it's like, I'm looking for the higher time frames and this is bearish and you're just gonna let that rock, versus, more your trades and your day trading type, your shorter term setups. I wouldn't trade them in both accounts. No. Right. So you could see, right, if you look at from a daily, that's what you're looking at. See, those are your daily candles on your 1 hour. So while they look like candles on the daily, you're trading inside those candles on your lower time frame.
Yeah, that makes sense.
Mm-hmm. Yeah.
Thank
So
you.
if you're welcome. Yep, be all crossed up. So here you can see it. Look at what's going on. Like that found support. Clearly, that's finding support at that level. So you can see here that if maybe right here in this zone, okay, and we've seen this on the other time frames already, but you can see right here, right, the price is moving up. See that? That's past support becoming future resistance.
Right.
You got it right here. Look how this came. Right? Look how this came down. Pull back. See how it held? And then it dropped. All right. Now we may be coming back up to try to retest that level again. And that's what we're looking. All right. See, look at what it's doing. Just always remember, like, if I'm a bear, I want a high price. I want a high price if I'm selling, if I'm bearish. Okay. I want a high price. And you can use the fibs and support and resistance to help you determine where that high price may be. Look right here. Here's that move right there. See it? Look where price got held up. See how it pulled back? So if you didn't have a fib on this chart, and you're just using price actions, that's why we say you have to start there. You have to start there with your support and resistance, right? Because now I'm just adding extra confluence with my fib. You see that? Because now, see, look, now if I play that 61.8 or higher as my sweet spot, or even your 50, right? You coming into this zone here, 50, 61.8, 786. I love 61.8, 786. Why? Because now I could, if my overall bias is bearish, once it gets into that zone and that high price, I can short that. And this becomes your setup, your preferred setup over and over and over again. Stops above the A, 61.8 or deeper, right? That's my zone here to enter there. Where's my projected target? Well, if I get a 61.8, it's the D extension. There. Right. So I'm focused on price action, support, and resistance. I'm using my fib, that extra additional confirmation, because we know it all comes down to the math. That's going to help me project my target. That's what helps me stay in my trades. If I'm swing trading, right? If I'm truly swing trading, then hey, on this scenario, right, off this daily chart, okay, call that 200 pips. Okay, 61.8 zone, 680. All right, so that's almost 3.5 to 1. That's why that 61.8 target, right? People, it's the golden zone. It's not magic. It's just math. If I'm trading with the trend and I wait for those pullbacks, those deeper pullbacks, 61.8, 786, is automatically putting me in the right risk to reward ratio every single time. Yep, it is. It's amazing. It is, Carolyn. Right? And you're starting to get it. You're working hard. You're starting to get it. Right? So it's the same thing. So now, look, it came to the target. Right? So it's a beautiful way to swing trade. So here I'm with the trend. I'm looking from a global macro perspective, like economy's tighten. It's back and forth on a recession. Is it going to be a hard landing, soft landing? We just read, right, that the look at what's going on. All right, let me pull this back up. Right, the Eurozone, having learned the Eurozone economy has slipped into recession. So this is what people have been calling, right? We're starting to see some things starting to slow down as it relates to the inflation, right? They're trying to get that inflation down. So they've been aggressively hiking rates, trying to get people to slow that spending, right? Something's breaking. The labor market's gonna break. Something has to break for them to get this back under control, right? At least that's a lot of people's perspective, right? So that's when the layoffs come and things like that. They don't want to see that happen, but sometimes that's a result of what they have to do to get this inflation back under control. So if you think about that long term, well, if we get global tightening, commodity currencies, don't tend to do too well. So yes, it's rallying now, but is that rallying to my high price? Right? Is this market rallying to my high price in this zone, right? So we think about the same thing on this setup. If I'm strictly a bear, then this is what I'm waiting on. Here. So you sit this on your chart like this. This is from the daily. Okay. It just goes to show you it doesn't matter the time. So you sit this on your chart. I'm a bear. And guess what? The Swiss franc acts as a safe haven. So if you get things start to tighten and the sentiment shifts to risk off and investors go to cash, guess what's going to happen? They're going to take their money out of riskier assets. That tends to hurt your commodity currencies. Well, the Swissie's a safe haven. Maybe we see the Swissie strengthen. Okay. We just saw the Swiss National Bank Chairman Jordan speak about, hey, they're not trying to deal with the second and third bouts of this inflation stuff. They're going to do what they have to do with their rates. So you have another situation where they may raise rates. Okay. So, but now if I rally to my high price, okay, all that 286 or whatever it is, minus 286, and then my extension, okay, 891. Oops, 891. And this is, I think I said 286 or something. Minus 286. Bang. Okay. So what you do, if you're a bear, you say, you know what I'm going to do? And I always like to set my limits just before the levels. Okay. I'm setting me a limit there. We'll keep it right on it just for this model. But I got a sell limit right there. And I'm moving on and I'm looking at other pairs. But when this price moves up into this zone, if it hits my sell limit, it's going to take me in on the sell. Because I'm looking to get short. I'm looking to short this pair. And that's how it works. Now, what's going to happen is if this price pushes up and it gets short, and this is a good one to follow. Okay. So right now, on the lower time frames, if this price is going to work and move to a higher price, okay, because we're in a down retracement zone, okay? Again, it's not going to move like this. It's going to move in waves. And that's what you're playing on the lower time frame, because what this D extension from this last fib represents coming into this daily and weekly support is what? A potential low price for a buyer. This is the game we play. All right? It's a potential low price for a buyer. So we need them to buy to our high price. And then based on past history, technically, all right, when we come into this zone, because this is past support becoming future resistance, are there sellers here? Are there bears here that's thinking the same thing about getting short at these levels? If there are, this is going to turn over. But guess what? It's not going to just go like this. On your lower time frames, it's going to go like this. Right? So, for example, if we get to this level, and this becomes the C to D push zone, okay? We've identified our C, price turns over. On your lower time frames, price is going to move in that direction like this. Yes, this is going to be periods of consolidation, right? This is just an example. It's not going to be perfectly like this. But ultimately, that's how it's going to move. So what do you have on your lower time frames? You have A, B, C, D, right? A, B, C, D, A, B, C, D, A, B, C, D, A, B, C, D, A, B, C, D. That's what you have going on your lower time frames. Everybody follow me on that? Drop me a 1 in the chat. Right? Hopefully that helps some folks, right? That's what we talk about, spatial intelligence. And then so what you have to do is you have to make the decision, right? Hey, what time frames am I comfortable on? Do I want to use these? This is the overall move from the top down, from the higher time frame. So it's going to make 800 ABCDs for 891 pips or so. So we have to make the decision as to how we want to get involved on the lower time frames. Do we want to say, I find my high price, right? We always say that we can use our monthly and our weekly to determine our directional bias. We can use our daily time frame, right? In the true nature of swing trading, we can use our daily time frame for our high and our low prices. Well, this will be our high price projected. Okay. So on my lower time frames, whether it be my 4 hour, my 1 hour, my 15, because the lower you go, the smaller the waves get, right? The more choppier it gets. So say this is like my 1 hour waves. You have to decide, do I want to say, for example, enter initial position here off my daily, and then as price moves in my direction, say this is my 1 hour, when I get those 1 hour fibs, when price pulls back to my key levels on my 1 hour fibs, do I want to add another position, right? And start to compound my trade. So boom, we get a pullback, I add another position. Okay. A, B, C, D, boom. I get another pullback, a new fib. Look at what's going on. Bang. Add another position. Okay. At those C points. Right. Or am I the type of trader that I like trading on the lower time frames? And I am going to, hey, I use my daily chart to determine my overall direction is down I've got 891 pips of selling potential. Do I want to go down to my 4 hour, my 1 hour, whatever chart you like to trade on? And every time I use my fibs to the downside, every time I get a pullback, I'm gonna take a trade, bang, right? Take a trade. And I'm gonna ride it to that 1 hour, or that 4 hour, or that 15-minute D extension, and then I'm gonna get out, take my profit. And then when a new fib forms on my 4 hour, my 1 hour, or my 15, whatever you want your chart to be, when I get a new fib to form, bang, if it gives me a pullback, I'll enter a new trade because I'm overall bearish. Boom, I'll ride that to the D extension here, right? And you can take your profit along the way, or you can use the same dynamic to add to a short position and compound your trade. That's totally up to you guys and your trade plan, right? That's your style, bit by bit. And that's fine, right? The issue is with most people, besides risk management, and we say it all the time, is they can't get the direction right. They have a hard time getting the direction right. And sometimes that's because, you know, they're not doing top-down analysis on a regular, and sometimes you're just gonna be wrong. This is it, right? Get used to being wrong when you trade, right? That's why risk management is important. Okay. But this is how the entire concept works, right? You can see how, in order for this to move, right, you had to have buyers push the price up to this level. Somebody's always buying and selling. That's the way it goes. We just use this philosophy because we feel like it really enhances our ability to see those footprints and what's really going on by taking an overall view of it instead of just being trapped in the weeds down on the lower time. Right? So that's why we like it. That's why we believe in it so much. Okay. So, you know, you have to make the determination. Like you said, you can have two accounts, you know, so think about it. Your big boys are holding shorts. This is why this price keeps moving down. Right? This has been short to its low point for 1,400 pips. If this moves back, right, to the 61.8 on the daily off that B boundary, right? That's 436 pips. And that's the beauty of this market, right? It's how you look at it. So whether you're a buyer or a seller, you both can be right. It depends on the timing. Some of the groups I used to be in all the time, like, they would think we were crazy for taking 80-20s and those trades. But it's because of how we see the market. Wow, the Aussie Swiss is bearish. Why would you take that? Well, what are you waiting on? I'm waiting on a high price to sell. Well, how do you think it's going to get there? People are going to buy. Exactly. Some of your best traders in the world are counter trend traders. Right? I know they tell you always trade with the trend. Okay, that's cool. But know that trend trading doesn't have a ridiculously crazy high strike rate. It doesn't. Look it up. Yep, make money on the way up and the way down. So good conversation. Good conversation. So that's where we are. So that's why we see it off these lows, right? See it coming off these lows, right? Doesn't want to drive back to a high price. But this setup here is saying, okay, if it's going to push up to the zones that we talked about, the market moves in waves. So how we find these other plays is that, well, if this is moving up, then it moves in waves. Okay. Based on our Fibonacci principles, if I get a shallow retracement of 236, less than the 382. So anything less than the 382, and this B boundary breaks, okay? So less than a 382 retracement, right? 0 to 100% move here. The market only takes back 23% of this move. It pushes up, it breaks our B boundary. Well, history tells us that when that occurs, oftentimes it'll stall out at this 118, 127 zone, and price will get pushed back down for a deeper correction to at least the 382 or deeper. That's the rule. That's the rule. That's why we don't necessarily buy off of 236s, because we know it can come back down. Now you can if that's in your trade plan, right? Like I have caveats in my trade plan. Hey, if I get a double bottom, you know, a price action pattern at a 382 level, you know, hey, I'll take it. I'll take it. I'll take it long, right? But I prefer for this price to come here if I'm going to get long on it. Okay. If we're going to buy back up to that zone that we saw on the daily, I would prefer to buy it at a low price. But this is just one of those things that we were taught by our mentors and discovered about the Fibonacci sequence and price levels. That if you get this scenario, there's an opportunity to counter trend trade this move, because the market likes to seek out at least a 382. Right? At least a 382. So hey, we could short this back to the 382. If not, if you're saying, hey, I'm buying this, then you needed to move in this direction anyway temporarily so you can get a low price to get long. All on how you see the market. It's all on how you see the market, right? And what you want to play. We try to make it simple. If I'm trading with the trend, right? And if I'm on my lower time frames, we know I'm in an overall down retracement zone. And if I'm looking to buy this back to a high price, then I know I've got an up AB fib. I know that I wanted to come into my sweet spot if I'm looking to get long. Why? Because it puts me in the proper risk to reward ratio for the buy. If I'm looking to counter trend trade this, well, I know my 80-20 rule. That anything less than the 382 with a break of the B boundary gives us the potential opportunity to short this at a high price back down into the zone. With the trend, preferably 61.8 or deeper. Counter trend, preferably like to short off the 80-20. Do you have an option to short off the B boundary? Yes, but to max the maximum opportunity for a counter trend trade using the fibs is in this 80-20 zone after a shallow retracement. Only rules. That's it. No different. Daily. This is moving up. If I'm going to short, I would prefer to short it in the 61.8 zone or higher. It's the same thing. Back and forth, back and forth. Good morning, Shauna. Right. So that's it. No matter what the time frame. Right. Okay. So here we are. That's the Aussie Swiss. Any other questions on this pair? No? We good? You're welcome.